GM. So we're seeing that flush off the monthly open. It's December the 1st. This is exactly what I talked about in last night's weekly outlook video. Typically, you see smart money, they bid up the price towards the end of the month, so end of November, and then the start of the new month, when your retail traders who just got their salary on that last working day of November, they bought, they did their monthly DCA, they can now dump on those people. They generated the exit liquidity, pushed priced up before the end of November, and now, start of December, you see this sell off. Very classic, and especially on a Monday. So let's take a look at it. Monthly candle, of course, been down only for December so far. Long way to go, though, of course. Doesn't mean anything at all, but it is interesting when looking at the lower time frames. So, really, to look at the wider market here, since we've begun the New York session an hour and a bit ago now. So you're seeing Bitcoin actually down and in this downtrending structure where you have a markdown off the monthly open. Consolidation now, this is a bearish consolidation where you'd expect another markdown and continuation. And a further reason why I'm expecting this is because look at the NASDAQ. It's actually sideways and didn't have such a violent move down off the monthly open. So you're seeing relative weakness in crypto to the stock market. You're seeing gold off that monthly open actually had a rally, and you guys will know by now if you've been watching my channel for any amount of time, when gold rallies in the short term, Bitcoin dumps. It's simple correlation. It's been playing out for years now, and gold is sideways. Dollar, on the other hand, since the monthly open, has actually gone down. So this is the one caveat to everything I just said there, is the fact that this is actually showing a potential risk on move. But other than that, you're seeing Bitcoin relative weakness to stocks and to gold, which adds the strength to the bear case on any downtrend. So if any of you guys are on a Discord, you know we've been scalping this move off the New York Open. So mentioned to you guys that I'm watching the New York Open. Potential setups would be off an open drive move based on the break of this box. And that's exactly what we got. So we started to break down from the box. And I said, look out for a break of the previous week low. That likely leads to new lows for the day. So chart looked like this. This was the box. And we then broke below the box, broke below that value area low, retested it. So I added a compound. And we had that opening drive flush where we made a new low for the day. Monday's low was over here. We went straight through that. And now we are consolidating within a downtrend, within a New York flush, which is within a monthly open that has been bearish so far. And you're seeing, as I said, all of those signs in the wider markets to suggest that crypto is weak right now off the December open. So I'm now looking at the higher time frames. This, of course, is a 1 minute chart. We've been scalping, making some beautiful profits today inside the school. But what's going to happen from here? Let's actually take a look at that and analyze the market on some higher time frames. So if you see over here, you've got Monday's low, which has been broken. It's now a new low over here. So this is no longer Monday's low anymore. We've got the previous week low over here. These are two levels that I'll be looking at on potential reclaims. So we can now call this the breakdown level since we've made a new low. Reclaiming that and reclaiming the PWL will be a sign that bulls are potentially regaining some control and bears are losing momentum in this current downtrend. But until then, we've got all of these liquidity targets below, which are targets on this move because momentum's to the downside. Right off this monthly open, weekly open, daily open here on Monday, we flushed down, consolidated, and trend is your friend. Expect continuation lower until you see signs of that changing and we actually maybe break above this consolidation, get above this value area high of the consolidation. I was looking at the volume profile of this consolidation to see where it was most distributed. So if you get above that value area high instead of breaking down from it like we did in this example, then that invalidates the setup that I was looking at. But at the moment, lost the consolidation, lost that 100-week EMA that I've been talking about as a very key level. Started eating through some of these lows, so I expect continuation lower until we see some of those reclaims, and especially the reclaim of the value area high at 86.7K, because that would be then a change of character. But for now, it's downtrend, consolidation, downtrend. So I'm expecting continuation lower when it comes to the 15-minute. So this is a bottom-up analysis, guys. A lot of people do top-down analysis. I do that a lot as well, but this is another example how you can start with the low time frame and actually go up in time frames to give you a read on the market. So these are all the liquidity levels on the higher time frame that I was looking at. And of course, on the lower time frame, you see them more respected and you see how they're playing out. But essentially, all of this liquidity that built up in this rally never got tested as we headed into that end of the month classic rally, is now getting wrecked. Built up liquidity now gets taken, and it gets taken violently because it's built up so much. And longs just kept longing, and all of these stops build up, and that then leads to this violent move down. So on the 1 hour, it's very simple. Again, you're waiting for that value area high reclaim, and then on some of the higher time frames, when you look at something like the 4 hour, what we really need to see is this monthly open reclaim. And if we take some of these drawings off just for now, clean up the chart a little bit. On the 4 hour, what you want to see is first of all that 100-week reclaim. You've got your market structure level here at 86.4k. This is the most recent high that's led to this lower low. Closing above there would be a sign that maybe we're actually going to start filling in this gap, that monthly open dump. And then for bulls to really gain control, you want to see the monthly open actually reclaim. So you've got this clear gap here between these levels over here, where if we see price actually start to close within this gap, I would then be looking for price to potentially actually have a squeeze back up to this level. And very often you see that on a Tuesday. So Monday dump, Tuesday reversal, if we are going to get that set up. But at the same time, you can also just see Monday down, monthly open down, and that leads to continuation lower. Maybe we have to retest some of these lower liquidity levels, potentially even the low over here. So I'll be watching this gap as your kind of bullish control indicator. If we start closing 4-hour candles in there, then I'd look for a full gap fill back to the monthly open. But until then, till we reclaim that market structure level, I'd be looking for continuation lower because volume is being respected here. So we take the drawings off again. You can see impulse down, high volume. And then on this next impulse down on the 4 hour, even higher volume. So that is harmony. The effort that traders are putting in, the sellers are putting in, is being met with a result of new lows. So that's the market respecting the selling. So you'd expect that to lead to continuation lower until, again, you see a reclaim of the market structure and start seeing price close within this gap again, because then that would show bulls are actually taking some sort of control and price is showing something different. So I do also have two setups that I'm potentially looking at on the long side. So first idea was this green path. So that's played out pretty nicely so far. We've flushed down. We've got below that 100-week EMA. And if we can reclaim the 100-week EMA, and ideally, as I said, closing into that 4-hour gap, as I mentioned, I think that then sets up a move where we can look for longs, even if it's just scalping on low time frame. Maybe it turns into a swing after, especially if we reclaim that monthly open over here, then it can turn into a swing, I think. We can look for long setups to play it that way. Of course, I'm in a short right now, as you can see. 50% profits got taken, though, and stop losses at break even. But looking at long setups now, especially since we've got this flush and we're heading back towards the lows, because there's a chance that we are just going to go for a retest of these lows. As I mentioned yesterday, you get everyone bearish on this flush. You get everyone losing their minds when they were just bullish a couple weeks ago. I remember I had literally people DMing me, trolling me, saying, "Oh, I bet you wish you bought more," and a load of crap at 91k. It literally was when I was getting a bunch of haters messaging me just because I sold my cycle bags at 121k, I think. Pisses off some people, don't know why, because here to make money, and I'm actually the only YouTuber trying to show you guys how to make money and not shilling you the crap. But anyway, that was a clear top signal. And then what I said yesterday was, when those bulls, those retarded bulls, get a little bit euphoric, you get this flush down into what can just be a retest of the lows or liquidity sweep in the blue example, where price is actually just forming some sort of bottom for an extended rally later on. So that would be the blue path, sweeping the lows, where I'd then look for a reclaim, look for longs. Green path is again looking for that higher low instead of a sweep. And that's going to be triggered most likely with a close in this gap as well. Not just a close above the 100-week EMA. I actually want to see a close in this gap, because then I think some of that gap can actually fill. So that's what I'm looking at in these two scenarios. We'll update you as always with what I'm doing. And when we look at the order flow, what are we seeing? Because when we go to the daily, so I talked about this on the weekly outlook last night. I'll pin it in the comments for a high time frame market analysis. Don't miss that one. But essentially, this rally since the capitulation day on Friday, you've seen open interest falling. So this rally's been fueled by positions closing. So shorts closing out has led to the market going up. Now that's not real demand, as I said last night. And that's why you see this flush to actually retest the lows. And now we're finding out, or going to find out, if there is actually real demand at the lows. And that can go as low as 80K for a sweep of this liquidity. But that's where you find out if there actually is a spot bid coming up. It's the retest that shows you price doesn't want to go lower, because maybe we do just blast through and continue this downtrend lower. As I've been saying for some time now, you look at something like the daily, you get something like the 12 and 21 EMA bands on. Where did we reject from? Right at these bands, which is exactly where you'd expect price to reject from, because it keeps rejecting from there. Markets are simple if you let it be. Got all these wicks, keep rejecting. This is a respected EMA band, and once again, happened for, what's that, the 5th or 6th time rejecting that band. So should be no surprise to see this move, first of all, because we're rejecting at a known trend resistance on Bitcoin. Question is right now is whether that rejection, whether this short squeeze now on the retest can lead to actually some demand, a spot bid returning. And when we see CVDs, we do see perp CVD down during this period, which is actually good to see for the potential of some sort of long setup forming, whether it's tomorrow, whether it's in the coming days, because we see perp CVD actually, since this low over here on Friday, they've made a new low. So this is actually quite a big divergence, guys, going on here. There's a lot of futures shorting going on. Price has not made a new low yet. So price is not yet respecting all of this futures shorting, as you can see. And you've actually got spot CVD. It's up. That's a divergence. Now, price needs to actually bottom out here and form one of those setups that I showed you guys over here, either green path or blue path. But that is, again, a promising sign where if price does bottom out, all of these shorts that are going against spot, going against price, at least until new lows are made. This all changes, of course, guys, if we do just blast down to new lows and continue lower, then all of that spot selling is right. But until then, you've got the potential. You've got what could be the early signs of what can be some sort of bottom forming. Maybe we're going to go for another push lower and then reclaim the 100-week EMA, start trading in this gap, and we get something like that. Maybe we're going to have to go for a sweep first, and then after the sweep is when we bottom out. But alternatively, of course, you can break down lower. I'm just saying the setup is there for a squeeze and price to bottom out if bulls do want it, just because of all of this heavy shorting on the perp CVD and price not making new lows yet. Again, until it does, guys. You've always got to look at price first when you're analyzing this data. So that's pretty interesting. We'll keep an eye on that when looking at those setups. Likely going to be more interesting tomorrow. As I said, Tuesday, I don't think you're going to see a big reversal on Monday, especially since we've had this bearish flush down, and the shorts are right, at least on low time frame for now. But on higher time frame, as I'm saying in this chart here, can we see these shorts actually been proved wrong and not make new lows and continue lower? If so, big divergence there potentially setting up as we see the spot bid really holding up the market. It's that passive bid holding up price at this stage. So let's see who wins. That will be shown, I think, in the coming days. And that's the setups and that's the kind of logic behind these setups that I'm looking at here. But for now, short on low time frame. As you guys saw earlier, riding that short until we hit some of these potential lower targets. Some of these liquidity targets over here. Stops at break even, so risk-free, locked in profits. You can already see we're rejecting at that red line, that 100-week EMA on the back test, rejecting at this previous week low at the moment. So that's good. If we do reject there and start filling in this pretty inefficient move up here, that would show me that this is likely to just continue breaking down. And of course, I'm in a short, so that's what I want to see. I want to get price to some of these liquidity targets down there, or I can look for some final take profits to fully close out that position and then look for some potential long setups over here. So that's what I'm looking at in terms of Bitcoin. And on the super low time frames, you can see this inefficient move up. This squeeze is just shorts getting squeezed because open interest is declining. So that's, again, not real demand. Short squeezes can go higher than you expect, don't get me wrong, but there's not proper demand behind this because it's futures exiting. It's less interest in the market that's putting it up just because shorts are getting blown out. Anyone shorting the lows is just getting annihilated. So that's what you want to see as a bear right now, is the fact that there's no real demand coming back in yet. So watch to see if this gap fills in and we make new lows. That's good. That's harmony. Or if we start to reclaim some of the levels that I mentioned earlier, then potentially this squeeze does need to go higher. And you've got that 100-week EMA, previous week low, as I mentioned, as levels to watch for if we get above or below to see who's in control. So that's the market update. Low time frame one today, because last night did a high time frame outlook. I'll pin it in the comments again. If you've enjoyed this video, guys, drop a like, drop a subscribe, turn that bell on. Let me know you value the content. I read all the comments, and I'll see you in morning markets tomorrow. GM.